Consumers point to mortgage rates, not home prices, as the key barrier to affordability. The finger's being pointed right at us, guys. It's not the home price that's the problem. It is the mortgage rates. Right out the gate, that tells me that people see the value in the current price, but they do not they do have an appetite for the amount of monthly cost it has to carry to get it.
Well,
Absolutely.
As a loan officer, I see that and I kind of just think, well, duh. I mean, the interest rate is what's going to raise your monthly payment or lower. I mean, remember that one client we saw where I think we priced it out and it was about 7.25 or maybe 6.75. And then we priced it out at 3.5 and it dropped almost half of the monthly payment.
Yeah.
So it's like, when I see this, it's like, well, obviously.
Well, the craziest thing that I saw was compared to last year right now, right? If we're talking about somebody's mortgage, it has gone up from 60 to 74% more.
Yeah.
In just a year's time, which is crazy because that proves that point that we were discussing, right? When we're going over there and working with your 3.5, 2.875 versus now where we're at in the 7.5, and we're getting closer conventional, some at 8%, which is pretty crazy.
I mean, even you say it was like 60 to 74%, which is obviously ridiculous. But imagine I went to you guys. I said, hey, I'm going to raise your mortgage payment just 20%. You'd be like, what the?
Yeah, 20. It's already enough.
Just kidding. No, now that's not too bad. But you're absolutely right. People are more concerned about the interest rate. 1%, what they're saying is a 1% interest rate higher than before is going to make my payment hundreds of dollars more a month.
Yeah.
Versus, I can purchase 800,000. I'll buy it for 850. If the rate was lower, I think they'd be more prone to pull the trigger on something like that.
Yeah, this is a little bit of like a little teeter-totter exercise. One thing goes up, the other thing goes down. And so when prices were going up and rates were at 2.5%, 3%, 3.5%, it's like, oh yeah, sure, I'll pay that 850. Oh, it's not 800, it's 850. Well, it's only going to cost me an extra $60 a month or $80 a month. But now you're talking about that 800,000 at like 7%. Oh, now I'm talking about 180, $230 a month different. That's a whole different ball game. And then you have an affordability crunch on that too. But what's interesting to me about this particular article is it is sentiment. Once again, we have this conversation. Well, why does sentiment matter? Well, it certainly does, because sentiment impacts decision making. And in September, 16% of consumers reported that it was a good time to buy a home. 16%. That's 6%. 16%.
Yeah.
And then you have 84% indicating that it's a bad time to buy a home.
Wow.
This is really a dent. This is a massive dent to the percentage of home ownership that like every administration really cares about, and increasing home ownership, especially among first-time home buyers and in communities that maybe don't have a high rate of home ownership. This is going to be a problem. I would be very surprised if this was overlooked in the election cycle coming up in 2024. I think this is going to be something that people talk about.
Well, on a good note for all you listing agents, realtors, right? 63% said it was a good time to sell.
Yes. Yeah.
That is down 3% from last month, though.
Yeah.
But hey, 63% of people are trying to say, hey, it's okay that I have a low interest rate. I think it's a good time to sell. I'm thinking, they think, well, this is the peak of the market. This is a good time to go out there and sell my property.
Yeah, and another, I feel like another reason why people are saying it's not a good time to buy too is because it says here, 23% of people think they're going to lose their job in the next 12 months.
Yeah.
That's a pretty big number.
Yeah, that's a psychological like ball and chain, if you will. Like it's already like running ahead of you that, oh, this might be a problem in my life. And again, I'm not saying that's without just cause. Maybe there's something in your work environment where you can kind of see where things are going, and maybe there's legitimate concern for that. But that is all problem because that spills over into other consumer buying behavior.
Well, and it's a valid problem just because, especially how you mentioned, if fuel costs are going up, the company has to put that on someone, and they might cut cost in the way of employees.
Absolutely. And here it is, guys. We're not just talking about fuel costs. That was just one of the factors.
Just one variable.
If you really look at even your food from even a year, I'm going to say even more than a year ago, it's gone up like 20-30%.
Yeah.
When we're saying, inflation was at 6%, it was really more like 20-24%. Because when we were looking at purchasing even a bag of popcorn, my mother-in-law likes to make, caramel popcorn, and she was seeing how the bags were downsized. She used to buy these big old bags, and now they were downsized like about 20%.
Yep.
So if you really look at all those things, It's factoring into the food. It's factoring into your electricity, utility bills. People, what was interesting, I heard that in the last year, more people have actually gotten into a second job just to pay for their utilities.
That's right.
So you're seeing more people working at your Starbucks, your Walmarts, your stuff like that. And in the jobless claims, it looks like, oh, there's less. There's actually more jobs being produced because these people are holding 2 jobs, the majority.
Right. And they're counted as another employee. That's important to note here. This goes back to Uncle Andy's complaints about data and what the decisions the Fed's making based on data. Let's say you go out and get a second job. That counts as another job that's filled, not a person with a second job. It's like a second person. But you're not a second person. You're still the same person now with 2 jobs.
Yeah.
So it looks like we have more employees, but we don't. We have more jobs filled, but it's the same person holding 2 jobs or maybe even a third.
And then what's the best thing? Unemployment. It doesn't count if you're accepting unemployment checks. You're not considered to be unemployed.
You can be unemployed but not receiving unemployment benefits. And then after your unemployment benefits are over and they've expired, you may still be unemployed but not counted.
Yeah.
So the idea of unemployment is a very defined, specific set of criteria that does not include the entire story.
Yeah.
So that again leans into, okay, the price is clearly not an issue.
Yeah.
It's affordability, it's mortgage rates. People do not have an appetite for this at large. But again, I know we're going to end up talking about solutions in a minute because we still live in a country and in a city where people want to own their house.
Correct.
They want to have a place for their family. They want to have a place for themselves. Maybe they have another generation of family that moves in with them right now temporarily or maybe permanently to make that work and make it affordable for everyone collectively. But I still think that there is that drive and that desire for people to acquire home ownership, and that doesn't care about any of this stuff we're talking about right now.
Correct.
If someone wants it, they're going to go do it.
You know, funny you bring that up. On a couple of my properties, I already have my previous tenants asking if another family could go in there. So guess what I have to do? Run a new application. There's going to be wear and tear in the property. But what can I tell to that tenant that can no longer afford the rent increase that I have to do? It's like I have to keep up with everything else because my expenses also go up. So, even though I consider myself a good landlord, right? Very generous and, I do that. And of course, I'm going to consider that only because I understand the kind of position we're all in. So we're seeing more of that. We're starting to see more people going and asking, hey, can I bring another family in? Because that's the only way they'll be able to afford is by they're kind of consolidating themselves.
Yeah, and we're starting to see kind of like this separation between people who are psychologically removed from the process because they're not able to compartmentalize that versus mathematically affordability wise just eliminated because I don't make $6,000 a month or I can't make a $6,000 a month payment with mortgage or a mortgage payment, principal and interest, taxes, HOA, and all that stuff. So there's the mathematically eliminated, and there's the psychological people that just punched out.
Well, yeah, and it doesn't help when a lot of new homeowners who are looking at getting homes are the younger generation. So you probably have your parents, uncles, family members. Oh well, I only paid $400,000 for this house. My mortgage payment's less than $2,000. You're crazy for buying right now. So I'm sure that doesn't help either.
Sure. Oh yeah, exactly.
Yeah, exactly. It's just another weight on the scale. Like it just.
I mean, people take it into account. They do.
It's so true.
Yeah.
It's almost like I don't know. How can I say this? It's like $2,000 to hear those payments. That's like is that going to be history? Is a new norm going to be, nationwide, it's $2,900 nationwide. That's the average mortgage payment nationwide.
That would be fantastic here.
Right? Come on now.
It's terrible in some other places. That's really high.
Our new norm is going to be at least $4,500. Like, oh my goodness. Yeah. This is just, I mean, we saw a friend at Starbucks this morning. And what did she say? I was considering selling my house that I've lived there for the last 14, 15 years. But then when I go and I look at a condo and I'm going to pay $4,000, I'm like, I'm not so bad where I'm at.
Yeah. It's like a two-bedroom place.
It's the golden handcuffs that Brian always talks about.
Jeez.
100%.
Like where can you go? It just doesn't make sense.
Yeah. So conditions for consumers are eventually going to have to come around. I think the question mark for me, guys, the wild card really is honestly just when. It's when. And always coming into an election year, I get a little bit more skeptical only because a lot of jockeying happens during that year where we know everyone's going to be casting ballots in November. And we're right around that time. We're only 13 months away from that. That sounds like a long time, but it's really short.
It sounds like a long time.
Yeah, the election is closer than when the Fed first started raising rates. How about that? The Fed did that 19 months ago. The Fed started raising rates 19 months ago. Elections to 13 months. But I guess my skepticism is this: that the conditions that are going to make things better for consumers are only going to come by a force function of maybe a handful of things. Number one, something catastrophic that requires the Fed to just go right back to zero right away, which I don't want to see because that would mean much more pain. Or a set of conditions that data driven, they actually get honest with people and honest with themselves, that gets us there quicker, or they let it ride and it's going to be slow through 2024 on the pain pain meter, and people who have like their grit about themselves are be the ones that are going to get in that inventory even if the inventory is low.
Yeah. Hey, the good thing is, and a good note is, equity is at an all-time historical high.
Yes,
nationwide,
and it's staying that way.
So you have solutions, right? Which leads us to our next topic. It's just
thank you.
Yeah, exactly. It's not all doom and gloom here. You know what I mean? The good thing is we have options. All right,